You're watching Morning Brief at 9. This is Morning Brief at 9 right here on News 9. First up, let's take a look at the headlines. Prime Minister Narendra Modi arrives in Washington, D.C. amid much fanfare and excitement from the diaspora. Bilateral trade with U.S. in focus and avoidance of tariffs on his two-day trip. Trade barriers like reciprocal tariffs are likely to be erected by US President Donald Trump. Will Prime Minister Narendra Modi turn the tariff tide in the US? We discuss on the show today. Meanwhile, good news on the retail inflation front, which has cooled to a 5-month low in India. Vegetable prices still 11% higher than last year. With the recent rate cut by the Reserve Bank of India, will the downward inflation trend sustain? We discuss. Six days of market crash. Investors lose 11 lakh crore rupees on investments. Small caps are the biggest hitters. Now, what's driving the bearish trend in the markets? We find out on the show. And amid the market meltdown, be careful of small caps is the word coming in. But some experts also say that this may be the best time to continue with SIPs. Now, in addition to that, there is caution in selection of stocks being recommended, but no panic selling is the word coming in from financial advisors and market veterans. Mutual fund investments see a slight dip in the month of Jan, lower than December levels, while SIPs also marginally down just about 0.2% as per AMFI data released yesterday. The new income tax bill 2025 is likely to be tabled in Parliament today. Easier to understand language, some nomenclature changes in a few phrases, clearer definition of crypto and online gaming, but no change in tax liability as expected. Amid the ongoing race towards premiumization, Samsung ironically enters the sub 10,000 rupee 5G smartphone with the launch of Galaxy F06 5G. And the wait is now over as Apple brings its much-awaited Apple TV Plus app beyond iOS to Android phones and tablets here in India. Prime Minister Narendra Modi has arrived in Washington, D.C. on a 2-day visit to hold high-stakes talks with US President Donald Trump in the face of concerns in New Delhi over Washington's new America First trade agenda, as well as its policy on immigration. The Prime Minister will be hosted by the US President today in what would be the first bilateral talks between the two leaders after Trump assumed presidency for a second term last month. Now, India-US Comprehensive Global Strategic Partnership is on agenda as per a tweet by Prime Minister Modi. Braving freezing temperatures and rain, the community members gathered at LAKH House, where Prime Minister Modi will be staying, welcoming him with slogans of Bharat Mata Ki Jai, Vande Mataram and Modi Modi as they wave the Indian flag and the American flag. But Trump's tariff policy is sending shockwaves across the world. Prime Minister Modi's key priority is likely to preempt any punitive trade action by Washington against India, and this includes the reciprocal tariffs that Donald Trump has been talking about. Let's take a look at what seems to be on Modi's agenda over the next 2 days, beginning today. Remember, he has already had a meeting with Tulsi Gabbard, but that meeting with Donald Trump is awaited. First on the agenda, trade pact with the United States in a bid to avoid high tariffs. Then Prime Minister is also likely to negotiate the trade tariffs imposed on steel and aluminum imports into the US as high as 25%. In addition to this, preempting reciprocal tariffs that President Donald Trump has been talking about could be on agenda for Prime Minister Modi. And then, of course, in the interest of overall economic growth of both the regions, expanding trade basket beyond the $130 billion as of last year that India and US enjoy, and ramping up India-US cooperation across sectors including energy, defense and technology could be on the agenda. And keeping the economics aside, Prime Minister Modi is also likely to talk against the mistreatment of Indian devotees. Now, remember, I just told you the bilateral trade between India and US was at around $130 billion last year, with India enjoying a trade surplus. If Modi wants to keep things his way, he would like that surplus to continue, but we really don't know which side the talks are going to turn. Joining me to discuss this and more today, I have with me Vivek Kumar, economist at Quantico, and Mithali Nikore, founder and chief economist at Nikore Associates. Good morning, Vivek and Mithali. Thank you for joining us on this very important big story that we are tracking today. Prime Minister Modi is in the US, likely to meet Donald Trump. What's going to happen on the tariff front? Vivek, I want to understand from you, what should be India's priorities?
Hi, good morning, and thanks for having me on the show. Well, India has already displayed the intent via the union budget. So you could say that we've taken a preemptive move already. The custom duties were to a large extent, at least some of the low volume items that US has been talking about, they've been reduced. And if you track the average rate of customs or the average rate of duties, there has been almost a 1 percentage point decline from 11.6% to 10.5%. So to some extent, you could say that we've set the ball rolling already. And now with the 2-day visit on, the priorities are pretty clear. You said it yourself that defense, technology and energy. So defense, the first round of talks has already happened, I believe. And this is where I think the broader spectrum or the broader canvas that PM Modi would be probably targeting is to avoid getting into a clash of tariffs, something that is currently seen in case of China and US, because imposing tariffs or a tariff-led trade war is clearly a lose-lose situation for all the parties involved. So you would not want to get into a clash of tariffs. Second is you would want to sustain some of the benefits of trade and commerce and people-to-people interaction between India and US to continue. So it's a strategy that will probably play out over the course of next 4 years, and we hope that India, under the leadership of PM Modi, probably will leverage that to the fullest extent possible.
Right. Mithali, Vivek is saying the tariffs are a lose-lose proposition. I'm sure, if nothing else, Donald Trump as a businessman understands this. So is negotiation the real tactic being deployed when we talk about tariffs, or is there real economic merit in US trying to impose tariffs?
So first of all, hi Karthik, nice to have you. Nice to be on the show. I think today, of course, tariffs are the number one agenda. Trade is the number one agenda, and I think the case that Prime Minister Modi would be making for India, he is today representing the will of 1.4 billion people, and the US understands the benefits of engaging with India. I mean, over the last decade, we've seen US-India ties only strengthen because the US has understood the power of the Indian consumer. The US has understood the soft power that comes from having, an investment in a country like India to counter, some of the forces in the region, especially in South Asia as well as East Asia and China. And the US has also understood the power of the defense ties that are there between the two countries. I mean, it's always been, starting from the very beginning. I remember there was a meeting that was held in 1994 between Rajiv Gandhi, Sam Pitroda, and the representatives of General Electric. And they were negotiating a deal where the government of India would purchase equipment from GE for defense. And that was the time when Sam Pitroda actually went and said, you know what, please start outsourcing information technology to us. And that's really how the IT industry started. So I think over the last, 3 decades, and of course the last 10 years, we've been managing to work very well with the US counterparts. And today, the opportunity for Prime Minister Modi to make that case of the long-term ties, of the defense buying potential of India, of the IT industry growing together, partnerships, and, bringing that focus onto the long-term nature of this relationship.
Right. Mithali, very interesting that you brought in the 1990s and the entire globalization era that kick-started around the period that you are mentioning. But Vivek, globalization seems to be a thing of the past. I think nation first is pretty much the foreign policy and the economic policy of nations, whether it is the US, whether it is China, whether it is India. So days of outsourcing in the America first sort of prophecy seem to be over right now. So I want to actually come primarily to the fact that if you're talking about technology deals to be signed, then these technology deals are largely going to happen by way of India getting access to technology to build for the world. But is that something that the US is going to be viable to as an option?
So yes, in part, I would agree to the fact that globalization is on a retreat, especially in the last 4 or 5 years. So COVID was a game changer from that perspective, because it provided that platform for politicians to start looking inwards, not just in India, but everywhere in the world. So there is this mini wave of deglobalization currently passing through. And every country will probably try and position themselves on the global trade map, depending upon their strengths. And from India's perspective, I think what probably matters more is the scale and the market opportunity that it provides, so outside US and outside China. And post-COVID, there has also been the realization that one needs to not put all the eggs in the same basket.
Right.
And the China Plus One strategy is something which is finding many takers in the global global supply chain.
Right.
So India.
But
India
let me
offers
just interrupt you for just a minute, Vivek. If you're talking about China Plus One strategy, we've been talking about it for more than 2 years, 3 years perhaps now, and India was supposed to be the obvious beneficiary in the China Plus One narrative. But apart from perhaps Apple being one success story that India has been able to demonstrate, we haven't really been beneficiaries of China Plus One.
So these are tectonic shifts, Karthik. So they probably will not start manifesting in year 1 or year 2.
Okay.
But from a US perspective, so our total trade engagement, if you see how US has been dominating us, put both exports and imports together, the number or the share has actually been climbing up. So US probably in the total trade that India does in terms of merchandise occupies about 1/4 weight in terms of both exports and imports put together.
Right.
And the share has actually been rising.
Okay.
So yes, you could say that probably the China Plus One strategy has not really played out in the very short term. But if Donald Trump stays where he is over the course of next 4 years, you could possibly accept, because he's not the same Donald Trump as he was in his first tenure.
Right.
He's now backed by a larger majority from inside his own government.
Sure.
So he'll have much greater flexibility to push through some of his ideas. And from a geostrategic perspective, I think probably both the countries, if you take in isolation, both US and India, somewhere have the same problem of running a very high merchandise trade deficit with China.
That's right.
So while US has been extremely vocal about it, India has also been vocal, but not to the extent, not to the belligerent extent that US has been. So India has
right. I mean, I think eventually it comes down to bargaining power. How powerful are you?
Right.
How large is your trade, and how easily you're able to impose something which is in your selfish interest as a nation. Mithali, I think what we understand right now is that that Donald Trump has China definitely in his crosshairs when he wants to talk about America first in the context of deglobalization and making America great again. But you have to give it to the man, he has lived up to pretty much everything that he had stated he would do. He has done it by way of executive orders or by way of policy intervention. Now, another thing that he has been talking about is reciprocal tariffs. And While we understand that Prime Minister Modi is there to try and negotiate a way out of these reciprocal tariffs, but understanding whatever we do understand of Donald Trump over the last 1 month or so, from what we have seen, he may still go ahead and impose reciprocal tariffs. If he were to do that, how massive an impact is it likely to be on India?
So, in fact, Karthik, just before coming on the show, we are actually launching a study to, look exactly at exactly this. What is going to be the quantitative impact of reciprocal tariffs on India's economy? And it's a very complex question because, value chains are so integrated at this point in time across different products. And when we look at, of course, a number of custom duties have been relaxed this time, but that doesn't mean that they won't come into the ambit of reciprocal tariffs. So, when we look at aluminium, steel, of course, those are areas where the US has gone ahead and said this is a 25% tariff for any country coming into the US selling to us. But on the other hand, when we look at other commodities, especially high-tech products, the semiconductor industry, the electronics industry, when we look at even the tech, some of the raw materials that are coming in, even in the textiles and food processing industries, to that extent, some of the machinery which comes in has components which are made in the US or we have to import from there, and then this again has an impact on our exports as well, because our exports are going to become more expensive when they are sent to the US economy. So a very complex picture which we really need to quantify.
Right. Of course, it would be hard to quantify, and you're right, our exports are going to become obviously that much more uncompetitive when they go outside the shores of India and enter US. But Vivek, I want to pose this one last question to you. Right now, India enjoys, if I remember correctly, a trade surplus of give or take about $33 billion with the US. Now, if things were to go south between trying and negotiating these tariffs with the United States, and if this trade surplus was to go into, let's say, a deficit territory, while I understand the current account deficit is going to take a much larger beating, but this $32 billion of surplus, which may become, perhaps at par, if not a deficit, in the context of a $3.7, $3.8 trillion economy, how much of an impact is that for India's own economic growth?
It's a hypothetical question, Karthik. And the impact obviously is going to be huge if you stick to what the essence of the question is. 2023, we had about $40 billion of trade surplus with you. So if you want to make that zero completely, you have that $40 billion of trade gap opening up potentially in 2025 or 2026. So whenever the impact comes. Is it something which is likely? Well, probably not, because, at the heart of it, Trump is using tariffs as a tool to negotiate. So he doesn't really want tariffs to be imposed for the sake of it. The idea behind that is to start getting countries onto the negotiating table. Right. And, in some sense, you could say that we probably have an early advantage here, because we are the third nation to call upon the newly elected president. Right. So we'll have some early movers advantage here. And I would not tend to believe that whatever surplus that we are currently running with the US on the merchandise front will see a dramatic shift in the coming years. It might see a little bit of a tinkering here and there, which you could talk about some of the low volume items, like, let's say, motorcycles and maybe some of the electronic components which could benefit key stakeholders in the US, for example, let's say Apple or maybe Tesla in terms of automobiles. So you could have some of these positioning from our perspective, but a sea change in the overall trade numbers is unlikely to happen.
All right. Well, Mithali Nikore and Vivek Kumar, thank you so much for joining us on this very important story. But I request you both to stay with me, because I want your inputs on another story that we are tracking this morning, which comes by way of inflation. India's retail inflation has dropped to a 5-month low at 4.31% in the month of Jan, down from about 5.22% in the month of December, largely due to slowing of food price increases. Meanwhile, rural inflation has decreased to 4.64%. from about 5.76% in the previous month. Urban inflation, on the other hand, has contracted to 3.87% compared to 4.58% in the previous month. Now, this cooling inflation raises the likelihood of perhaps another rate cut by the Reserve Bank of India, which had reduced its key policy rate by 25 basis points to 6.25% this month. Now, food inflation, which represents about half of the CPI or the consumer price index basket, has also fallen. This time it's down 6.02% in the month of Jan versus an 8.39% in the month of December, making the lowest level since August 2024. Food prices, while still high, rose by 11.35% year on year, a major decrease from December's 26.6% surge. Mithali, I want to come to you first. As an economist, the right decision taken by RBI to cut rates, because inflation seems to be now cooling down and coming closer to that 4% range that RBI wants to bring it down to?
So, Karthik, I think, let's do a little rewind back by a quarter when you and I were discussing why the RBI didn't go ahead and cut interest rates, when we were talking about this in October, November, because at that time, the RBI took a neutral policy stance. I mean,
which continues even now.
Sorry?
The neutral stance continues even now. It hasn't changed its stance. So do you think the RBI is on the edge? It may want to wait and watch and not be very sure that it wants to be accommodative?
No, of course, the neutral stance continues even now, but the interest rate cut has actually happened. And at that time, when they took the neutral stance, they said no rate cuts because we think that at this point in time, inflation is not in control. And we know that, GDP is decelerating, but inflation is still not in control. But in January, they've gone ahead, they've, made the interest rate cut because it's very evident that at this time, the need to kickstart the economy, the need to kickstart the consumption spending actually takes precedence over the trends in inflation. And also, it was very evident that in this quarter, we will be able to combat the issue of inflation because, this is the time when it's not as though we have that much of festive buying. It's not as though, so all the seasonal factors are actually in a space where, inflationary trends are in our favor. And of course, the economy has got a triple whammy. Because the economy has got the tax breaks which were announced in the budget, and we've got, the low inflation, and we've got the interest rate cuts. So at this point in time, for the next 6 months, I don't actually expect inflation to go up. But after 6 months, because of these three, factors coming together, again, we might see a cyclical impact and uptick in inflation.
All right, Vivek, Mithali is talking about the triple whammy. I want to bring in one more dimension to that, and that is the depreciating rupee against the US dollar. Now, while it has corrected a little bit between the last 2 days, but the Jan inflation data would have accounted for the massive dip in the INR as well. So, numbers overall looking good to you at 4.31%. While the US dollar and the dollar index was at an all-time high and the Indian rupee had plummeted, numbers at 4.3%, not looking too bad, and could the impact have been even lower if the rupee had not depreciated as much?
Yes and no, both, Karthik, I would say.
Okay.
Yes, because there are certain high-frequency items within the CPI basket. For which the exchange rate pass-through happens almost on an instantaneous basis. For example, if you're talking about, let's say, precious metals in the CPI, so in the form of jewelry items, so they will tend to pass on either the international price movement or the exchange rate impact almost on a live basis. So you'll see the transmission happening within a month. So that is getting reflected. In fact, the core inflation did move up, not much, but just about 10 basis points in the month of January, from our estimate of 3.9 in December to 4% in January. So that, to a large extent, can be attributed to what's happening in the precious metal space internationally, as well as the exchange rate impact. So it's a cumulative impact. Now, there are also few items in the food basket. For example, edible oils. We do import a lot of edible oils. Now, here also there will be an exchange rate impact. Although the exchange rate impact is not going to be seen within a month, it could take almost a quarter for you to see that impact.
All right.
Now, beyond some of these items for which the sensitivity of imported price is high, the rest of the basket will show lower sensitivity towards imported inflation. And typically the channel of transmission from the exchange rate, it starts on the producer price side. We don't have a producer price inflation in India, but we have a WPI inflation in India. So you'll see the first point of impact on WPI inflation, and from WPI, as the corporate sector chooses to pass on, depending upon how much slack they have individually in their own sectors, you'll see that transmission spilling over to CPI. So that transmission can take anywhere between 1 quarter to as long as 3 to 4 quarters, depending upon how much slack it is there in that particular sector.
Right.
So,
too early to rejoice is what you're saying, Vivek. We should hold on for another quarter and see if this momentum of cooling inflation sustains.
Correct.
All right. Well, let's leave it at that. Vivek Kumar, Mithali Nikore, thank you so much for taking out time and being with us right here on News 9. With that, it's time for a quick break. But on the other side of the break, we'll bring you all the action from the Indian stock markets as they open this morning and what is really driving this bearish sentiment. You're watching Morning Brief at 9.
Associate sponsor, New Virtus GT Line, style to wander.
इस खेल में अब खेला होगा, हर नहले पे दहला होगा। भीड़ बड़ा है, स्टेज बड़ा है, पूरा भारत साथ खड़ा है। We are the Tigers, साथ खड़ा है। We are the Tigers, गेम बड़ा है। Dribble like a rap, pass, 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 setting up the trap, kick it hard in the ball, chuck, there for the ball. Here we are the Tigers, chuck there for the ball. Here we are the Tigers, chuck there for the ball. Here we are the Tigers, chuck there for the ball. Here we are the Tigers, chuck there for the ball. Chuck there for the ball.
Mama must be missing us, nah?
Let's take it one day, give me one day. Feel the itch under my skin, it's a fun day. You been like it when you see we end up, hey. But it doesn't matter, 'cause we gotta get going.
New GT Line, Taigun and Virtus. Volkswagen.
News 9.
News 9.
News 9.
News 9. News 9. News 9.
Now they're relaunching News 9.
News 9 is coming back. News 9 will be very useful for creating public opinion.
It's going to be only truth.
And I wish you all the best. Very happy and all the best. बहुत अच्छा लगा मेरे को, उनको मुबारकबादी देता हूँ. Congratulations to News 9. All the very best.
All the very best, News 9.
I wish the channel all the very best.
Let News 9 be the voice of Karnataka and India.
Welcome back. You're watching Morning Brief at 9. Let's look at the mood on the Lal Street this morning. Markets have opened just a few minutes back and once again, 7th day in a row, it is a red start, a negative start for the Indian markets, and the Nifty 50 has slipped below the 23,000 levels, which is the level that we saw in the month of May, June last year. So gains of almost 7 to 8 months have been wiped out already in trade. The Sensex is also down about 0.1%. Just trying to stay steady at the 76,000 levels. Of course, the biggest hit comes once again from the small cap space. Small cap 100 is down about half a percentage point this morning at about 16,000 odd levels. Of course, volatility, as we can see day on day, continues to increase right now in the range of about 15.36. Pretty much all sectors are again in the red this morning. Let's look at the Nifty 50 heat map and take a look at what are the anomalies here. Well, the IT sector completely in the red again. HCL Tech is down about 0.7% in early trade, and that's exactly the story coming in from Tata Motors as well, down about 0.7%. Now, many of these stocks and companies would be waiting for the decisions that come through after Prime Minister Modi has met with US President Donald Trump, and a clearer picture on where tariffs are likely to be headed could swing the markets in one direction or another. But overall, bad news coming in 7 days and counting in a row. Let's try and understand some of the factors which are behind what is really leading to what many people are referring to now as a bearish sentiment and a bloodbath on the stock markets in India. Well, to give you some context, over the last 6 days, excluding today is the 7th day and counting, but over the last 6 days, Sensex and Nifty 50 have both lost more than 3% in the last 6 days, and the impact on investor wealth has been fairly massive. Investor wealth of about, give or take, 18 lakh crore rupees of wealth has been wiped out in the last 6 days. And as I told you, at about 23,000 levels, we are back to the levels on Nifty 50 that we saw in the month of June. So almost 7 to 8 months of gains and investor wealth creation has been wiped out. So what are the real challenges to the Indian markets right now? To begin with, it is the trade tariff wars and the uncertainty that comes by way of tariffs. Are tariffs here to stay? Are tariffs likely to be negotiated? And in the process of that negotiation, what is the deal that which nation gets? And that includes India. Remember, Prime Minister Modi is in the US, and some of these tariff discussions are likely to be held. Now, in addition to that, there is this increased volatility which is making foreign investors fly out of India, and they are choosing the US dollar as an investment. Remember, the US dollar index, ever since Donald Trump has become president, has been at a record high. So flight of capital from the more risky sort of asset class of equities to a safer US dollar is a trend that we are witnessing by way of foreign investors pulling out of Indian markets. Now, that of course is leading to a crash, but that's not all. You also have investments in gold. Remember, gold prices have also been at record high day after day, and gold considered a safe haven investment with the volatility in the stock markets and with the uncertainty with the tariffs is something that investors are preferring to invest into. And the domestic story not looking very pretty as well. The Q3 results announced by corporate India are also primarily tepid and muted, so no real excitement coming by way of growth in profitability and overall the impact on GDP witnessed in India. Remember, India's own macros with GDP projections have also been lowered for this year and the next. And add to that, the job market and the US data on employment is looking good, and the rate cut hopes in the US have also been dampened. So let's move on now to the impact of this volatile market on India and the SIP and mutual fund industry. Now, AMFI data has been released, and it says that for the month of Jan, the inflows into equity mutual funds have witnessed a slight decline of about 3.6%, falling below the 40,000 crore rupee mark to about 39,687 crore rupees against almost 41,155 crore rupees in the month of December. Now, this as per the AMFI data. Now, despite the drop in monthly inflows, net investments into open-ended equity funds remained in the positive for the 47th consecutive month, a trend that kick-started during the COVID-19 era. Now, mutual fund folios now stand at about 2.3 crore rupees as of Jan, not rupees, I beg your pardon, at 2.3 crore folios in the month of Jan 2025, while the AUM of India's domestic mutual fund industry has increased to 67.25 lakh rupees or so. SIP contributions, despite the bearish market mood, have stayed robust but have witnessed a slight dip of just about 0.2% to a total of 26,400 crore. And moving on, the new income tax bill is likely to be presented in Parliament today with a span across 622 pages. It aims to replace the 6-decade-old Income Tax Act of 1961. The proposed legislation will be called the Income Tax Act 2025 and is expected to take effect in April 2026. The proposed law replaces the term previous year as mentioned in the Income Tax Act of 1961 with tax year. It also eliminates the concept of assessment year. So previous year is going to be called financial year and assessment year is going to be called tax year in the new Income Tax Act if it passes through Parliament. Now, the Income Tax Bill 2025 comprises a total of 536 sections, 16 schedules, 23 chapters, and like I told you, 622 pages. Now, at 622 pages, this is still about 200 pages lesser. In fact, 201 pages lesser than 823 pages that the old act entailed. So, Finance Minister Nirmala Sitharaman there living up to her promise of not just simplifying but even cutting down the length of the act by about 20% or so. Now, the new income tax bill is slated to be simplified. There's use of crisp language, removal of extra provisions and explanations along with expanded definition of income. Now, these are some of the key features of the new Income Tax Bill 2025. However, no major structural change has been incorporated in the new bill, with experts saying that it is broadly a simplification exercise that will ensure continuity and ease of understanding for the common man, with consolidated sections to reduce cross-references, but it lacks any major tweaks in penalty or compliance provisions. And before we slip into a break, let's look at some of the global headlines in news today. US President Donald Trump orders agencies to work with his top advisor and right-hand man Elon Musk on federal job cuts and government downsizing. Donald Trump also speaks with Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky in his first major diplomatic push to end the war in Ukraine. Meanwhile, Wall Street closes mostly lower as inflation data raises doubts about the US Fed cutting interest rates. And there's been a sharp rise in US consumer price inflation, marking the biggest increase since August 2023, driven by higher housing and food costs. And inflation is seen sharp in the egg prices. US shoppers face higher egg prices and purchase limits as bird flu outbreak tightens supply and raises concerns about the spread to cattle. India's $1.4 billion tax demand on German Volkswagen sparks legal battle, raising concerns for foreign investors. Meanwhile, Japan's SoftBank posts unexpected $2.4 billion loss as Vision Fund takes a hit from declining Coupang and Didi valuations. And beer maker Heineken's shares surged 12% as brewer beats profit forecast, launches a $1.55 billion buyback and predicts strong growth in 2025. Wildfires rage in Chile, killing one and destroying many homes as emergency services race to contain the blaze. These stories and more on the other side. You're watching Morning Brief at 9.
What is to the nines? In literal terms, it's perfection. But to us, it's not just a phrase, it's an attitude. One that starts at your desk and sends a statement to the world. To the nines is about taking charge. It's a way of life where every seam, every fold, is crafted with excellence. It's timeless elegance and uncompromising quality made for the corner office. It's the ideas that inspire redefining order and elevating the tabletop. To the nines, for the leaders of today and the visionaries of tomorrow.
News 9.
News 9.
News 9.
News 9.
News 9.
Now they're relaunching News 9.
News 9 is coming back. News 9 will be very useful for creating public opinion.
It's going to be only truth.
And I wish you all the best. Very happy and वल्लेदागली and all the best. बहुत अच्छा लगा मेरे को. उनको मुबारकबादी देता हूँ. Congratulations to News 9. All the very best.
All the very best, News 9.
I wish the channel all the very best.
Let News 9 be the voice of Karnataka and India.
Hello everyone, this is Papon and I am coming to Dilwalo Ki Dilli this Valentine's Day to perform for the World Travel and Tourism Festival.
At 9, let's look at the global stories in news today. Let's begin with the US. In a major move to shrink the federal workforce, US President Donald Trump has ordered US agencies to work closely with his top advisor and right-hand man Elon Musk. The directive calls for identifying government employees who can be laid off and pinpointing functions that can be eliminated entirely. Take a look.
President Donald Trump on Tuesday ordered U.S. agencies to work closely with top advisor Elon Musk's effort to shrink the federal workforce.
You can't have an autonomous federal bureaucracy. You have to have one that is responsive to the people.
Trump directed agencies to identify government employees who can be laid off and functions that can be eliminated entirely. Before the order was signed, Musk stood alongside Trump in the Oval Office and fielded questions from reporters.
Can you talk a little bit about how closely you're working with agency heads as you're directing these cuts? Do they have how much input do agency heads have when you're making these decisions?
Yeah, we work closely with the agency heads, yeah. So there are sort of checks in place. So it's not just us just going in and doing things willy-nilly. It's in partnership with the agency heads.
The world's richest man defended his role as an unelected official who has been granted unprecedented authority by the president to dismantle parts of the U.S. government.
Well, first of all, you couldn't ask for a stronger mandate from the public. The public voted, we have a majority of the public voting for President Trump.
The newly created Department of Government Efficiency that Musk leads has thus far provided no information on whom it employs, where it is operating, or what actions it is taking inside government agencies. DOGE posts few actual results from its work, providing only dollar figures for cuts it's claiming to make in particular agencies with few specific details. However, Musk pushed back at criticism that he and his team there have operated largely in secrecy.
I fully expect to be scrutinized and get a daily proctology exam, basically. Might as well just camp out there. So it's not like I think I can get away with something.
Trump's executive order sets forth rules requiring government agencies to hire no more than one employee for every 4 workers who leave. It compels agencies to work with Musk's team to identify large-scale reductions in force and determine which agency components may be eliminated outright. The order exempts from cuts those employees whose work is critical to national security, public safety, as well as law and immigration enforcement. The push toward mass layoffs comes after the Trump administration attempted to cajole federal workers into accepting buyout offers. That effort has been blocked by a federal judge.
And staying with Donald Trump, in his first major diplomatic move since taking office targeted at the Ukraine war, US President Donald Trump held phone calls both with Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky to discuss the ongoing war in Ukraine. Trump has long pledged to bring the conflict to an end, and these talks mark the first step towards that goal. Here's more.
Donald Trump on Wednesday discussed the war in Ukraine in separate phone calls with Russian President Vladimir Putin and Ukrainian President Volodymyr Zelensky. It's the U.S. president's first big step towards diplomacy over a war he has promised to end. In a post on his social media platform after speaking to Putin, Trump said the two leaders had agreed that negotiations should start immediately. Putin and Trump also agreed to meet, the Kremlin said, and Putin invited Trump to visit Moscow. Putin last spoke to a sitting U.S. president in February 2022, a call with Joe Biden shortly before ordering thousands of troops into Ukraine. At the White House on Wednesday, Press Secretary Caroline Leavitt said the Trump administration was committed to ending the war.
I myself just spoke to the president about these calls, and he told me to tell all of you they were very good calls, they were very positive, and the administration is wholeheartedly committed to a peace deal to end, once and for all, the Russia-Ukraine war.
Russia occupies around a fifth of Ukraine and has demanded Kyiv cede more territory and be rendered permanently neutral under any peace deal. Ukraine demands Russia withdraw from captured territory and says it must receive NATO membership or equivalent security guarantees to prevent Moscow from attacking again. Defense Secretary Pete Hegseth on Wednesday said NATO membership was unrealistic, as was recovering the territory Ukraine had lost.
Chasing this illusionary goal will only prolong the war and cause more suffering.
Speaking from Kyiv Wednesday, U.S. Treasury Secretary Scott Bessent said a minerals deal between Kyiv and Washington would provide Ukraine with a so-called post-war security shield.
And we believe that this is an important signal to the world, to the Russian leadership, that we stand together.
Trump has said he wants $500 billion in rare earth minerals from Ukraine. Zelensky said Kyiv would study the draft agreement presented by the U.S., adding that he hoped they could seal a deal at a meeting later this week in Munich with U.S. officials, including Vice President J.D. Vance.
All right, and back home in the U.S., consumer prices in Jan saw their biggest jump since August 2023 as a result of higher costs for housing and food. As inflation continues to rise, the central bank, the U.S. Fed, faces tough decisions ahead. More in this report.
U.S. consumer prices in January rose by the most in more than a year, reinforcing the Federal Reserve's message that it's in no rush to resume cutting interest rates. The Labor Department's Consumer Price Index, released Wednesday, jumped 0.5% last month, the biggest gain since August of 2023. That put the annual inflation rate at 3%, higher than economists polled by Reuters had expected. The surge in prices offered a cautionary note to President Donald Trump's push for tariffs on imported goods, which have been panned by economists as inflationary. Trump was elected on promises to lower prices for inflation-weary consumers. High inflation could not only imperil Trump's agenda, including tax cuts, but also potentially prevent the Fed from cutting interest rates at all this year. The central bank started raising borrowing costs in early 2022 to tame decades-high inflation, which had peaked that summer at 9%. By late last year, success was in sight, with the annual inflation rate down to about 3%. That allowed the Fed to issue its first interest rate cut in September, followed by another in December. But since then, progress toward the Fed's goal of 2% annual inflation has stalled. And for now, so too have plans for further rate cuts from the Fed. Wall Street's main indexes moved lower after the report's release.
All right, now back home, India has hit German automobile manufacturer Volkswagen with a record $1.4 billion tax demand after a 12-year investigation. The move is raising fresh concerns that lengthy tax scrutiny and legal battles could discourage foreign companies from investing here in India. Take a look.
India is demanding back taxes running into a record $1.4 billion from Volkswagen after 12 years of scrutiny. In return, VW is suing Indian authorities to quash the demand. But there are concerns that lengthy investigations and litigation could sour the plans of foreign firms in the fastest-growing major economy. Automakers such as Hyundai, Honda and Toyota face demands of about $6 billion collectively. That's in disputes on income tax, customs and other payments that go back years, according to Reuters analysis. Prime Minister Narendra Modi has been courting foreign investors with promises to simplify regulations. But lengthy tax investigations remain a sore point. In one high-profile incident, telecoms company Vodafone won its case against a $2 billion retrospective Indian tax demand after more than a decade of legal battles with New Delhi. Now VW's move on January the 29th to sue India for $1.4 billion is making foreign companies nervous. Tax advisors and lawyers say they are getting queries from clients about how years-old tax cases could come back on them. India's finance ministry did not respond to queries from Reuters. Modi wants to turn India into a manufacturing hub, but many electronic and auto companies rely on assembly operations using parts imported from markets such as China and Europe, and that often spurs investigations.
All right, and Japan's SoftBank Group has reported a surprise $2.4 billion in loss in the last quarter, weighed down by a drop in the valuation of e-commerce platform Coupang and other tech firms in its Vision Fund portfolio. More in this report.
SoftBank founder Masayoshi Son has made waves recently, pledging massive investment in AI. But the Japanese investment giant surprised markets Wednesday when it reported a $2.4 billion quarterly loss. SoftBank saw a fall in the value of tech firms held by its Vision Fund investment arm. The disappointing number raised more questions for the company's founder. He's bet big on artificial intelligence, pledging billions to work with OpenAI. But Wednesday's results have left some investors wondering how he aims to fund such big backing. The quarterly loss came from unrealised valuation losses at South Korea's Coupang, Chinese ride-hailing firm DD Global and AutoStore Holdings. Analysts expected net profit of $1.5 billion. Sources said in January SoftBank was in talks to invest up to $25 billion in ChatGPT creator OpenAI. Recent media reports have said that figure has grown to $40 billion, though some of that would later be syndicated out to other investors. SoftBank has also committed to investing $15 billion in Stargate. It's a venture with OpenAI and Oracle that will build AI data center capacity in the US, and it's been backed by US President Donald Trump.
Meanwhile, Heineken shares have jumped 12% after the Dutch beer maker reported higher than expected profits. The company also announced a share buyback program and forecasted even more growth in coming years. Investors welcomed the news, pushing the stock to its biggest one-day gain in years.
Heineken's shares surged 12% on Wednesday after the Dutch brewer reported forecast-beating profit. It also launched a share buyback and predicted more growth next year. The world number 2 brewer's annual organic operating profit rose 8.3%, beating analyst forecasts. The performance provides more reassurance to investors who have criticised Heineken for both over and under-promising with its outlook and for volatility in its results. The company announced a $1.55 billion share buyback program spanning 2 years, and also forecast further growth in operating profit of between 4% and 8% in 2025. Heineken further said it has taken into account the risks of US tariffs on countries like Mexico, where Heineken brews some beer for the US market. Tariffs could affect brewers by driving up the price of cans or affecting sales of imported beer. The US accounts for less than 5% of Heineken's global revenues, and the company says it therefore does not expect any major impact.
All right, and there's been a sharp recovery in the Indian stock markets. Remember, just 30 minutes into action on the markets opening, we saw a dip, and now that dip has in fact reversed into a positive territory. Nifty 50 had started lower than the 23,000 levels, but now holding about 23,131, up about 0.4% from yesterday's price. There's been a sharp upward correction in all the indices, and again the Nifty small cap had started the day with a 0.5% dip and is now 0.7% higher. Most sectors have moved from the red to the green territory. Let's look at the Nifty 50 heat map and try and make sense of what is really happening here. Pretty much every sector. Reliance is up about 0.2%. There's been a sharp correction and a mixed bag now in the IT space. Wipro had started low, is up at about 0.5% from yesterday's level, and most sectors are gradually moving from red to green. Let's take a look at some of the top sectors and the top companies that are gainers in early trade today. Let's look at the Nifty 50 top gainers, and here you have it. Tata Steel is up, and so is Cipla, Kotak, BEL and Bajaj Finserv. I want to quickly look at the chart on the Nifty 50 index today. The Nifty 50 index has in fact now, if you look at the Nifty 50, it's up about 0.4%. If we can bring up this chart that I'm holding, that is the action that you've seen. The market started on a low turn. It dipped about 0.3% and has now sharply raised its levels up about 0.5% in trade today, holding a little stronger than the last few days at about 23,171 levels. Let's leave it at that on Morning Brief at 9. Thank you very much for watching. News and updates continue right here on News 9.
We are at the highest airfield in India and one of the highest airfield in the world. It is the most beautiful airfield in India. There's no aircraft that cannot land on this airfield.
This will be the highest airfield in India and 5th in the world.
This particular runway will cater for most of the military aircraft, fighters and transport landing.
A strategic edge to the forces, deterrent for our neighboring countries.
Jai Hind.
Yes, 100% completion. TV9 News and your News 9 Plus is the first team here.
This and more. Streaming on News 9 Plus. Subscribe and get free vouchers.